As we all understand, when liquidity improves and inflation declines, deposit rates may remain stable because at this point of time, consumer price index based inflation CPI or retail inflation is to 4.7% in April 2023 from 5.7% in March 2023. Shaktikant Das, Governor of Reserve Bank of India, said last week that the May 2023 consumer price index based inflation would be even lower than the April's CPI numbers. As the banking system's liquidity is likely to increase with the introduction of 2000 notes back into the system, interest rates on deposits are likely to remain stable. It is also expected that Reserve Bank of India has reached the end of the rate hike cycle and there will be no more hikes in subsequent monetary policies. In light of the fall in retail inflation, the Reserve Bank of India is expected to maintain the policy repo rate at 6.50% when it unveils its next monetary policy on June 8th. Consumer price index based inflation CPI or retail inflation is to an 18-month low of 4.7% in April 2023 from 5.7% the previous month. Many bank customers are waiting for higher deposit rates before booking their fixed deposits. There will be surplus liquidity in the system after 2000 notes are withdrawn from circulation and those 2000 notes are coming back into the system in the form of deposits. It is also possible that the RBI will not rise interest rates any further. In the absence of repo rate hikes, banks won't have any reason to increase deposit rates from here on. In the banking system, there is now a net surplus of liquidity as measured by how much money the RBI has absorbed from the system. Inflation of 4.7% in April indicates that the rate has reached its peak according to the CPI for April. Considering the data, I would suggest that we are on a long pause. Bank deposits have grown 10.4% as of May 5th, 2023, as against 9.7% in the previous year, and credit offtake has increased to 15.5% when compared to the last year, which was at 11.8%. The 2-year deposit rate of State Bank of India has gone up by 190 basis points since Feb 2022. There is a possibility, however, that banks may raise deposit rates merely to meet a loan growth target towards March end of the current financial year, that is 2023-24. There will be a very little incentive for banks that are not aggressive and are looking for balanced deposit and loan growth to rise deposit rates. For some time to come, deposit rates may remain stable, then may decrease based on the further liquidity position, or in case if the 2000 notes deposits at this point of time remains to be a temporary deposit mobilization aspect on the part of banks. Later on, if they are withdrawn further by the people in the system, then again the deposit rates may find spike, and that may also depend on how the inflation, which has gone down at this point of time, will progress going forward, and will it still remain contained or will it further propel, or some of the measures that we need to undertake as the time passes by. We all know that RBI has set a September 30th, 2023 deadline for depositing or exchanging 2000 notes. Approximately 10.8% of notes in circulation were worth rupees 2000 banknotes as of March 31st, 2023, and nearly 30% of 3.62 lakh crores rupees coming back into the system means currency in circulation will be reduced and banking liquidity will increase, thus pausing the deposit rates for the time being. Hence, we can safely say that at this point of time, when inflation trend is showing a decline and liquidity trend showing an increase, so deposit rates may show a steady trend without any increase or decrease for the time being. Thank you very much for your patient hearing.